There we go. Put that off to the side. And since it is a Friday, a lot of times we'd like to take, especially when we have weeks like we've had this week, we like to take some time to, we really like to talk about trading general direction of the markets, and there are some trades that I'm in right now. I'll go ahead and show you. Well, actually just one trade on our good friend, the dollar Swiss. I got about 30 pips into this. I think there's still opportunity in it. I'll talk about that here in just a second. So we do have some live trading scenarios. Euro dollar, I think, is poised for a possible trade. Dollar yen. So we have quite a few possible trades going into this week. And with the way the week started on Monday, I actually got a little bit nervous because the first two trades we placed on Monday, bam, bam, we got stopped out, and they were both from our scalping type of trading scenarios. But since then, from a swing trading standpoint, it's been extremely good week. And so just like we normally say on Fridays, we don't like to get too careless on Fridays and give money back when we've had the kind of week we've had this week. And it has been a fairly good week. In fact, a very good week. Let's first talk about Wednesday. And let me pull up, let's see, live trading room from Wednesday. I kind of have this updated to go over some things today, so let me just kind of go to the bottom. During class, we had captured a profit on our pound dollar trade for about 45 pips from Monday. We had a dollar Swiss trade that we put in on Wednesday during class. That was also a good trade. The other trade that we went over on Wednesday, so these were both profit-taking trades. Both of them, pound dollar we were in from Monday and took a profit on that for 45. Dollar Swiss, we got into a position on Wednesday during class, captured about, I believe it was about 30 pips on that trade. So good week. One of our big trades for the week on Wednesday, this is another one that I had on Wednesday, and you'll have to bear with me here while I pull the chart up, was on dollar yen. It presents an interesting scenario, and I'll go through a couple of scenarios on this. Dollar yen is one that we really do like trading in either direction, essentially. We like going long, we like going short, and I think there's a possibility for a long position today. We'll have to wait and see. However, the trade that we were in on Wednesday on this, and this was one to where it was a longer term trade. You all know my affinity. I love corrections that come into an ABC correction, what we call a Gartley pattern. And this was kind of a longer term bearish Gartley pattern on the dollar yen. During class on Wednesday, I was already short. And I was already short on this on Wednesday right here. And if you remember during class we started getting a little bit nervous. It started peeking up on us. We had our stop right up above this high to where you're risking about 108 pips. And as it came up, got a little bit nervous on this trade and got a little bit of a bailout by news on this. So it wasn't a purely technical trade. However, I think it was interesting because of the reaction that PitView had. Let's talk about kind of the direction of what helped us on this trade. Let me actually go back to the top here and just kind of talk about what's happening now. It hasn't been a huge week for news up until yesterday. We had several things happen that helped this trade. Bank of Japan. The Bank of Japan came out and hinted at an end to further stimulus. Basically, their hint came from statements saying that further stimulus would be counterproductive for their economy, which was more hawkish for their economic growth, so the yen strengthened. That was right in here. This was this huge candlestick right in here that got driven down. The interesting thing on PitView, when this was on pair view, when you were looking at it on any of the time frames right up in here, it was showing some huge negative imbalances before that came out. showing that there were banks in there that were bidding up the yen, meaning the dollar yen was showing like -20, -30, -50 on like the 1 hour time frame, showing a heavy amount of selling pressure, if you will, on dollar yen, and then it went down approximately 100 pips from this high. That was not where our actual take profit level, though, was down here. So this initial move on the yen did not get me out at my take profit level because I was looking for 108 pips on the trade from this entry right down in here. What ended up giving us a profit on this trade was actually the U.S. news with our core retail sales that came out at -0.9 versus a -0.4 expectation. That caused a huge amount of dollar weakness yesterday, kind of a just that knee-jerk reaction to bad retail sales numbers. So the dollar did end up getting weaker yesterday, pretty much across the board, which also presented some opportunities. The other big news of the week we'll talk about here in just a second, the UK inflation report, kind of an odd report when I first read the headlines. When I first read the headlines on this, I could have swore that the pound would get weaker because the first thing I saw was they may lower interest rates. And I said, well, that has to be bad for the pound. But when you read into it, well, hell, we'll just go through it right now. When you read into the actual story, they actually upgraded their growth forecast for the long term. The only reason they said there was a possibility of lowering rates is because of the near-term inflation expectations. But they did revise their medium-term and long-term forecast for growth to the upside. Essentially making it to where, it's coming back into play of the hints of them possibly raising interest rates sooner rather than later when it comes to their long-term growth. Their low inflation, Carney was pretty adamant by saying to the UK that they're not experiencing deflation. The reason why they're experiencing lower inflation is due to oil and food prices, which actually, if you look at a lot of economists out there, they'll say a lot of the lower oil prices for a lot of these economies is actually helping, is driving more growth in the consumer spending. So we'll, and lower food prices does, kind of the same thing there. Lower oil, spending less money filling up your gas tank, lower food prices, being able to, buy your groceries at a cheaper price. So, I mean, that was, when you read into the statement, it actually caused the pound with the upgrade in their growth forecast to go up substantially. So going back to this dollar yen here, so that news on the retail sales finally drove the yen down right in here to where we hit for 108 pip gain on this trade. So that was a nice little trade from Wednesday. So that was about 108 pips right there. A lot of these swing trades you got to have a little bit more intestinal fortitude on because you have to be able to you have to be able to put your stop in and say, you know what, I'm not going to let the market shake me out unless I'm wrong. But I'm going to stick with this dollar yen real quick, and you'll have to humor me for a second because I'm not sure that I showed you this back in January, because what this reminded me of up in here before that, a lot of times when there's government, like the ECB announcements, the Swiss National Bank announcements, yesterday it was speculation on the Bank of Japan, where PitView started going nuts right in through here, showing a huge negative imbalance on dollar yen before this move happened. And it brought up a point, so just humor me for about 2 minutes because this was a conversation that I actually had with a student. I didn't know if I went through it in class, so you'll have to forgive me if you're seeing this for a second time. This was the week after the Swiss franc, and the reason why I'm going through this is because the Swiss franc looked like the yen did on Wednesday evening before the unfixing the exchange rate. And the question that I got from a student online was, Steve, even though you told us to ignore the Swiss details and total view and pair view in the weeks leading up to last week's debacle, that was the unfixing of the exchange rate, I couldn't help but notice that PitView had the Swiss extremely well bid in the weeks leading up to the SNB decision. To this point, was PitView telling us something that could have allowed us to get in ahead of this move? And it was an interesting question. This was kind of my reply, and then we went on to look at where our class stood going into the unfixing the exchange rate. You'll have to use your memory a little bit, but if you remember in class going up to that for several weeks going into class, what we'd always see, we generally check this 24-hour total view to kind of get an overall picture of kind of the long-term bid and ask activity from market makers, which 24 hours when you're looking at bid and ask activity is substantial. Now, do you all remember, and please comment on this, do you all remember for several weeks we always pulled up total view and it always showed the Swiss up in here? For about a week and a half it was always up here near the top, showing that the Swiss was being strongly bid against all the other currencies, meaning buying pressure on the Swiss. Up until that point, the Swiss was strong across the board on that 24-hour total, and up until that point I had told you ignore it, because here, let me pull up another chart here just so we can get a better idea of what's happening here. Let me pull something up here real quick. Let me pull up the Euro Swiss and just give you an idea of what we're looking at here. Let me minimize this window real quick before we get into any trades. Up until that point, for that 2-week period, the reason why I told you to ignore it is because the Euro Swiss was trading right at that 120 level. You see this straight line right up in here on the Euro Swiss. This was the fixing of the exchange rate policy. And obviously, here's that big gap down that Euro Swiss had. So I had told you to ignore that. I told you that what's happening here is probably the fact that it's sitting here fixed at the 120 level. I told you don't concentrate on the Swiss. I said look what the euro, focus more in on the euro strength and weakness, because that seems to be driving the market up and down when it comes to like dollar Swiss and euro dollar. And I told you to ignore it. So I put that in there because I don't whenever I'm talking to students, I don't want to create any type of propaganda or create truths that just did not exist. I told you all, we're used to seeing this. Ignore the Swiss. Focus on the euro if you're looking to trade either one, either the euro or the Swiss pair. Even the day before this happened, looking at the 1-hour total view, I wanted to show them a shorter term standpoint. I took these directly from screenshots during the classes that we had, the live trading classes. And even the 1-hour totals would always show this Swiss up in here being strongly bid, meaning buying pressure. Meaning if you're trading dollar Swiss or euro Swiss, if you saw it being this strongly bid, you would be expecting both of those pairs to go down significantly. And it was odd because the Swiss National Bank had lowered their interest rate, and it was showing a lot of just buying activity from the liquidity providers versus all the other pairs. So I told the student, Swiss is again strong across the board, and yet again we're used to seeing this, so I told you to ignore it and focus on the euro. So when the student asks, is there something PitView was showing us that could have gotten us in ahead of this announcement? This is hindsight, folks, and hindsight's always 20/20, and I actually put that on here. In hindsight, even though we thought there was some kind of discrepancy, I do believe when we were looking back on it that PitView was telling us something. You didn't hear a lot of big banks and liquidity providers losing a whole hell of a lot of money in that. And I think one of the reasons for that is based on what PitView was telling us. PitView was showing us that liquidity providers were bidding on the Swiss. They were buying Swiss. And you heard of hedge funds and brokers going out of business by accounts being turned out upside down and hedge funds being on the wrong side of trades. But not a lot of big banks or liquidity providers did you see that lost a huge amount. And this is an opinion statement, so this is not a fact. I just said that, Swiss banks, which are huge liquidity providers in the market, other liquidity providers probably made a huge amount of money on that unfixing. Even though the SMB announced negative interest rates the week before, that, it probably was telling us something. Could we have acted on it? No. The answer is no. We felt the bid and ask activity was being erratic based on the Euro Swiss being at the 120 level. The fixed level. So the answer was no. I don't think we could have acted on it because we were trying to use some common sense there. I go on to say, will we ever ignore this information again when currency is this well bid on PitView? And the answer should probably be heck no, not when we see it being that well bid over a long period of time. I think we've kind of learned our lesson that we should probably act on it because that's exactly what PitView is doing. It is showing you what the liquidity provider activity is. It's answering that question that all retail traders have of what are the market makers doing? Is there some type of tool that can tell me what the actual big money is doing in the market? So I wanted to show you that, and the reason why I wanted to show you that is because the dollar yen actually had the same type of view when it was right up in here of a lot of, because remember, this was kind of a government announcement, just like the Swiss National Bank, just like the ECB announcements. Unlike non-farm payroll, these are announcements that sometimes a lot of, especially if a bank has an army of economists working for them, that will tell them, yeah, we should probably get into a position before this comes out. And that's speculation and opinion statement for me also. And that was showing that right in through here. Now, it's a moot point here because we were already in the trade. We are already in the trade down in here. We made our max profit. So, we already made it. We made 108 pips on it. In fact, we got out at almost the exact support level before it came down and bounced off this 118 level. So all in all, that was a really good trade on the dollar yen, and that was a great example of how PitView can work for you, and teaching us that lesson that when we see those things, we may not want to ignore them when we see that type of thing happening. All right, let me go back down. And sorry, I'm going to be doing a lot of scrolling today, so let me scroll down. Now here's another one to where I actually took this trade right here, but I didn't take it the exact way that we came about it in class. We had a bullish Gartley that was forming on the New Zealand US dollar on the 1 hour chart, to where we had a buy entry on Wednesday of saying, okay, when it gets down to the 0.7359 level, 595 level, and if you see the 1 hour totals go to a +5, to go ahead and buy into this bullish little Gartley formation on the New Zealand. And remember, all a bullish or bearish Gartley is, it's you as a trader saying, hey, I like this pair going up, I want to buy into a dip. So on this New Zealand dollar pair, we actually had a nice trade on this yesterday for about 63 pips. I believe it was 65 pips or somewhere around those lines. Because here's where the Gartley pattern was, but it never gave a PitView signal. It came down and made the ABC correction. It came down to approximately that entry price at the 78.6. But all through here, it actually showed more selling pressure happening. So it never gave that +5 on the 1 hour totals. At least it never alerted me to it. So, but we were able to kind of spot something on this right down in through here, because it was making a nice little trend line in here. And yesterday during class, we saw that it was breaking through this trend line right here. It made what we call a lonely bar break. It broke a trend line, and then we had a bar sitting there right by itself, right above these highs. So we went ahead and bought it. We went ahead and put a stop right below this low, and then looked for a 1-to-1 risk reward. So we traded a bit different than we explained in class. We kind of adjusted that trading strategy, which, well, let's face it, that's what trading is a lot of times, is sometimes keeping your head on a swivel and sometimes changing your strategy around, especially when you base your strategy off of a lot of support and resistance trading. This also occurred right after the retail sales number, to where we even more confident that the dollar could sell off after the bad retail sales number. So it gave us a chance to get in right after retail sales yesterday, and we were able to hit that one for a nice little profit. So when you measure in dollar Canadian, which was another trade that we put in for about +70 pips, we did have some that got stopped out. So I don't want to piss off the trading gods and act like we were perfect this week. This short-term strategy on the euro dollar, where we were looking for a break below the support level, this was one that did get stopped out. So not everything was peaches and cream this week. We did have a stop out. We were looking for a short-term break below the support level on the euro. We did get that. That did execute. Here, let me pull up I'm so used to using the euro dollar. Here, let me pull this up over here. It was on a 5-minute chart, but what we were looking at was the fact that there was this little short-term support level on the 5-minute chart, and we actually got our entry. I don't want to go to a 5-minute chart because I don't want to have to scroll back that far, but We got our entry right down in here. We got whipsawed. It came right back up and stopped us out on this big bar to the upside. So, yeah, not everything was great, but it did present some opportunities. We were presented with opportunities, I should say, this week to make some nice swing trades. So, where should we start? Well, I should probably start with the trade that I'm open on right now and give you my thoughts on it. So let me erase some of these objects. I'll go ahead and erase some of these objects on here. Zoom out a bit on this dollar-yen chart on a 1 hour basis because we'll be looking at that. So let's see here. What do I need to pull up? I need to pull up a couple more of my pair view windows. There we go. And whoops. Sorry, didn't mean for that to happen. I erased everything. Oh, there we go. All right. Let me change these around a little bit. I need to kind of hide my columns and change my time frames around a bit on these. Remember, when I show and hide my columns, the only columns that I look at are the session totals and the minute totals. And changing my time frames of my sessions to the ones we usually look at. We do look at 1 hour time frames. We look at 5 minutes also. I'm going to bring dollar Swiss onto this one. Get that set up. There we go. And then this one over here, I'm going to do the same thing. Take away the leaders, look at the session totals, change the time frames, 1 minute, 5 minute. Go ahead and put dollar yen on this one. Apply it. I got that up there now. Okay, good. So let's look at dollar Swiss first. I have a trade in here on dollar Swiss. I'm sorry. I want to explain this a little bit to you because it's not good enough just to come into a trading class and just want to get the trades. I think you should understand them. Dollar Swiss, when we look at this also on, let me go to a total view window here. And I'll put it on a 24 hours on total view. I know Swiss has been well bid over the last 24 hours. The euro and the yen, two of our usual suspects, are down here near the bottom. The dollar, when we look back 24 hours, is also near the bottom because of all the activity yesterday morning. If I go, so looking at the bigger picture, a couple of things that we've been bullish on. The pound we've been bullish on. So that's been going up quite substantially against all the other currencies from a bid-ask standpoint. The euro, which we're bearish on, that's been getting a little crushed. The yen, which I think this is a good sign, has been well offered today. Nearer term, when we look back at the last hour of how the market's opening today, the CAD is doing very well. The Swiss has been doing a lot of bid activity on the Swiss, mainly because of where it stands right now. Euro sold, dollar still showing a little weakness. Yen is showing some weakness here. These are all trading opportunities. Just a quick little recap of that. Let me pull up dollar Swiss. You're probably asking, well, why the hell are you long on dollar Swiss? And well, a couple of things. Dollar Swiss, one thing that I look at, I'll often look at the 1 hour totals right in through here. The dollar Swiss, I know that a lot of people might think, well, if it's so well bid on the Swiss franc, which would normally cause more of a downturn in this pair, then why are you long? Well, this is where you might have a lot more opportunity on this pair. Let me kind of switch my time frame around here a little bit, and first let's look at the bigger picture on the Swiss. Whoops, sorry. Bigger picture on the Swiss. There it is. All right. So let me pull that over, kind of expand it a little bit. I'm going to go back here. For some reason, there we go. That's coming into view now. Okay, there we go. Bigger picture on dollar Swiss. Here's the unfixing of the exchange rate. We made a lot of good trades on this way back up. And what you can see here is when you look at this consolidation that's been occurring, dollar Swiss, remember, they have a negative exchange rate, Swiss National Bank. It's been consolidating sideways, kind of the bulls backing off a little bit. What we've been seeing lately, the reason why I look at this consolidation is that, when you look at consolidation, it's kind of a tug and war between buyers and sellers. And also whenever you have this consolidation, you can tend to get a lot of, upward movement and downward movement between the bid and ask activity on PitView, because it's kind of a liquidity provider's dream when it's in here, because they can kind of buy at the bid, sell at the ask, and just collect a huge amount of transactions when it's going sideways like this, to where they're more at that 50-50 level. So you often see a lot of imbalances go from back and forth throughout that type of consolidation. Now, putting this back up here off to the side a little bit, let me kind of explain this trading scenario, because I've been trading the Swiss pretty aggressive as of late. One thing that I've noticed when we go back and look, zoom in on these charts a bit, is that the Swiss, look at that trend line. I'm kind of I'm what you would probably call a simpleton when it comes to like candlesticks. I look at candlesticks, I look at the body as momentum, and I look at the wicks or the shadows as being buying and selling pressure. And when you got a perfectly formed little trend line in through here, which signifies, a lot of buying pressure, when it means that, to me, I don't think the buyers, the actual big money, is really letting the Swiss breathe to the downside that much. I've been telling you for a couple weeks now, since the exchange rate got unfixed, is that I'm extremely bearish on this pair. That's my view, and it's always hard for me to get away from my fundamental view. What I've also been looking at is the fact that this has been tightening up like a rubber band. The Swiss has had a really hard time making a sustained break above this 9,300 level, but it keeps just winding up and winding up in this consolidation zone right in through here, where buyers are coming in, they're not really letting it go lower. Sellers are coming in and keeping it tightly consolidated, where the buyers are having a hard time pushing above 9,300. However, I do think there's short-term opportunities as it retraces. I got into a long position actually right up in here yesterday, to where I told my students, anytime I see this coming up here and looking like it might make a sustained break above 9,300, I think it's worth a shot to just go ahead and try to get in, because I feel like in the near term the Swiss can go up at least to like the 9,400, 9,450 level, which is about the halfway point from the gap that it had back on the 15th. So I did go long here, but I also told students that if it comes down and retraces near this trend line and makes a nice little retracement down to here, I'll go ahead and see if I can add to my position if I see that we have support come in. And you see it did. It made what we call a touch and close off the 78.6. And during this time, just like it normally does on dollar Swiss, the 1 hour and 5 minutes were going nuts to the upside. It came down it came back up, and I took a small profit off up here, and then I got into another position, the second little position down in here, when it came down and made a 78.6% retracement again. So you see it came down and made a 78.6 retracement here. All right. At the trend line, we're right near the trend line, to give us cause to buy into a dip. And then this morning it came down again to the 78.6 level and made another touch and close off the trend line. And the 1 hour total has been steadily going up. The 5 minute totals have been staying pretty green over the last in the 5 minute time frames, which is something that we like to look at. And even though it's coming back down, I think that there may be opportunity for you to get into this and still be able to set up a one-to-one risk-reward trade. You see I'm already in. I have my stop right below this low at 0.92548. So it's right down in here. Whoops. That's what I want. So it's right down below this. Well, I don't know why I put that X on there. You can see the blue line where my stop is. You can see my take profit is all the way up at like 0.9415. That's just in case it does make a break and moves, because I think when this winds up like a rubber band, if it can make that sustained break to the upside, that it would give you cause to get into this pair. And it's still, you see it's having a hard time bouncing through that 9,300 level once again today. What I would say on dollar Swiss, if you wanted to put in a position right now, if you wanted to put in maybe a shorter term position for today on Friday, is you can go ahead and put in a buy entry. It's given kind of a buy signal right in here right now. Yesterday, it was able to get up to like 93.32. This is actually kind of the resistance level right in here where these tweezers are. So this is actually 93.39 is where the resistance level is. If you wanted to put a buy entry in on dollar Swiss, which is steadily moving up the ranks as far as the dollar going a little bit more bullish today, I feel you do have an opportunity to set up, at the very least, a possible one-to-one risk-reward scenario on this. So if you want to follow along with this trade today, what I'd be looking at doing is your buy entry, and there's no need for me to put in a buy entry. I'm already long. I'm up about 15 pips. I'm up about, 15 pips on one, 12 pips on the other. So not a huge profit, but I'll take it. Buy entry right now at market. Pure speculative play. It's been bouncing around a lot on PitView. It was just really negative, as you saw earlier. Now it's back to the positive level. Buy entry would be right now at the market. Right now, I think with how close this low is to this trend line that's come down, to where you see this immense amount of buying pressure that comes right at these support levels. I think if you wanted to put in a stop, you could easily put in a stop right down here at 0.92670. So stop at 0.92670. Let me get rid of that little X right in there. What'd I do? That's not good. Draw a trend line again. There we go. Awesome. All right. And then for a limit, put a limit in here at one-to-one risk reward. Maybe a bit offsetting the fact that this is coming down towards the support level, or this is selling off a bit on dollar Swiss, but I think this red candle may give you a little bit more opportunity to get in on a better buy entry to set up a possible one-to-one risk-reward scenario. So, and keep an eye on it. If you can't get, if you see that it's going nuts on the 5-minute totals, maybe if you see the 1-hour totals also starting to go red, and it starts to get down, the candle starts to get a little bit longer, if you will. We may not see a huge amount of volatility this morning because it's a pretty slow news day when it comes to Forex trading. But you may not see a huge amount of volatility. But if you do start to see it come down, I wouldn't say get out if it goes negative 20, because we've been having a lot of negative 20, positive 20s right in through here. That's the problem with consolidation in the market. But this is an opportunity right now. Since I'm in the trade, I felt like I needed to compel you to say, if I'm in it, let's just have a buy party on dollar Swiss. So that's one that we're in right now. I'll go ahead and put that on here. Put that on the notes. You can call it a 1-hour trade, a 5-minute trade, a 2-minute trade. It doesn't matter what chart time frame you're looking at. We're looking kind of at the 1 hour. And if you're looking for a strategy, we've been just kind of trading bounces. And I just don't want you to think if I'm in a trade and I got a little bit of profit in it, I don't want you to think that it's too late, because I don't think it's too late for you to get into this one. I think you can still have some opportunity. Now, I'm not going to print this next trade out. I'm not going to put this on our sheet, but one other thing I want you to consider here as we look at these charts is when would be an opportunity to where we might look to buy this dollar Swiss maybe for a longer term opportunity. So what I mean by that, and I'll have to erase those objects just so I can, since we already have that printed out, what I mean by this is looking at this right in here on like the 4-hour chart. You could even turn it to a daily chart if you will. But when is it okay for us to buy the crap out of this dollar Swiss pair? We see this consolidation in through here. We see that ever so slightly on the 1-hour charts we've been making higher lows. But when would we maybe enter into a longer term position to look for the dollar Swiss to go up further? One thing that's certainly, and I would love to get into it a little bit earlier, which is why I've been kind of still actively trading this, even though it's been in the midst of consolidation, is looking for a daily close. If we get a daily close above 9,300, and that means on a daily chart, a 24-hour bar, a 24-hour candle above 9,300, that would be what I would look at to get into a longer-term buy opportunity. I think that if we can get a close above that level, that essentially what's going to happen is I think buyers are going to come back in and start selling off on the Swiss once again. I think eventually, and remember, this is my opinion, but that's what trading is. It's an opinion. In my opinion, IMHO, if you will, as my daughter would say, I think this can eventually cover the gap. I think that the dollar Swiss is poised to where not only can it go back at least halfway up on this gap down. This was a gap, folks, even though it shows a big bar. If you looked at it on a 5-minute, it closed like right here and came all the way down in here on the charts. That's what caused the big mess with the brokers. But I think it can at least go back, and that you see that 94.15, 94.50 level is kind of halfway up. But I think eventually the dollar Swiss is going to go back up to parity with the dollar, back up to the 1 Swiss per dollar level. I think it's eventually going to get back up there. There's too much hawkish sentiment with the dollar of the possibility of raising interest rates. I think the dollar is still king in the background when it comes to driving overall long-term strength in the market. But I also think the Swiss National Bank is going to hold steady at that negative interest rate. And they still reserve the right to go in and purchase purchase currency reserves, if you will, of go out and purchasing other currencies to try to weaken their own. They just didn't want to do it up here because the euro. They were trying to stay fixed to the euro. They didn't want to do it up here because they didn't want to. They didn't want to print unlimited amounts of Swiss in order to do it. But I think eventually it's going to get back up to these levels. So if it does make a daily close above that level, that's something we will certainly be looking out for. But then again, we have time to discuss that type of trading scenario, because obviously that would be an opportunity that just doesn't flash up on our screen. It's one that's going to take a more of a sustained approach. So there's dollar Swiss. Those are my thoughts on that today, and that is why I'm long. I have no problems being in it. I think that at some point I do expect kind of a volatile breakout to the upside. I'm trying to kind of put my trades in as before it occurs instead of after. So that's why I have a couple of lots on here, and we'll watch that throughout the day. All right. Let me kind of pull our charts up in a way that we're used to here. Let me put this one in the middle, dollar Swiss Actually, I'm going to put dollar Swiss over here for now. Change this to dollar Swiss. Get rid of that order ticket. And I'm going to keep that on just a 1 minute, 1 hour time frame. I'm going to close out some of these other ones so we can start looking at some other trading scenarios. And let me go ahead and Swiss, euro, dollar, dollar, yen. Put that in the middle. So you change this one to euro, dollar. There we go. All right, now let's take a look at our good friend the euro. Tile our windows so we have everything kind of in front of us here. I'll change that middle one. There we go. Euro dollar, this is one to where I don't think there's any question there's more of a bearish sentiment on euro dollar. When we look at this on the total view screen, the euro is one of our usual suspects. Super Mario just started their QE process. I think that there's a lot of bearish sentiment on the euro, not only from market makers and liquidity providers, but just around the horn in general. I think there's a lot of selling pressure on the euro. What does that mean for us? It means we like the idea of selling the euro. And I'm going to give you two different scenarios today for trying to get in on a position on the euro dollar. Actually, I may give you actually three different scenarios on this. So I wanted to show you how weak the euro's been. Pretty much most of the time frames, the euro's kind of come up in the last hour. You can see it's come up also on PitView. It actually started rising up the charts a bit. So it has been coming up in the past hour or so. But overall, in the last 24 hours, it's been extremely weak. And what do we like about trading the euro? Let's kind of bring this chart over and go through a possible scenario. One scenario that we like on the euro dollar is I'm a huge fan of selling the crap out of this thing as it retraces back to the upside. So what I mean by this is as we get retracements on the euro, I think selling into retracements on the euro is a good idea. So let me go through some longer term scenarios with you. The reason I'm going from this swing high is you can see it's already come off the 61.8 level. It's already come really close to the 78.6 level before dropping off once again. I don't think we have to wait as long on this, but I just wanted to show you how far it's retraced back up after being consolidated for a long period of time right here near the bottom. So looking at this on a shorter term perspective, let me go ahead and take that retracement off and let's zoom in a little bit more on this chart. From a short term standpoint, there's two different scenarios I would like you to look at today. One of them is if we see the euro dollar start to come up into this retracement zone, and I'm going to zoom in one more time because we'll have to take a pretty close look at this. If we see the euro dollar start to come up into this retracement zone down in here or up in here, you see it's kind of been climbing up a little bit. The 1 hour totals are starting to go a bit more negative here. But if it can get into this retracement zone right up in here, I would say go ahead and sell. This would be more of a short-term play here. So sell entry would be a negative 20 on the 5-minute totals. Okay, now listen to this on the 5-minute totals. Or here's the thing, sometimes if there's a lot of selling pressure on the 5-minute totals, it may just go like negative 10, negative 12, negative 10, negative 12, and not give you an actual sell signal. But the 1 hour totals will gradually go down and down and down further. So whichever happens first, and when it reaches the retracement zone, it doesn't necessarily have to be a negative 20, or it can be a negative 5.0 on the 1 hour totals. It's one thing I've been noticing recently, and I've gotten some question on from students, is what are we actually looking at here? Because sometimes I know we look at getting into swing trades when the 1 hour totals go to +5, -5, and there's been some circumstances where we never really get a lot of negative or positive 20s on the 5 minutes, but the 1 hour totals give us our signals. So we're gonna go with that. And so if you get that type of retracement, I think for the shorter term, you can put your stop right up above that 100% retracement level. So where would that stop be? That stop would be at 1.14422. So that would be 432. Because we want to put it, actually it would be more like 462 because we want to put it 1 pip above, and we got to account for spread. There we go. And if you do get into that, if it does retrace back up, which maybe it will during class, maybe it won't. If it does retrace back up, look for a limit of 1-to-1 risk reward. So just looking for it as a short-term play. If we wanted to, we could also look at this on just a 5-minute chart. I just was wanting to look at the price action on the 1 hour just to show you where the retracement zone was, because any type of little hiccup here up towards this retracement zone, which is in the 61.8 to 78.6 levels, I think is going to give us a nice cause to go short on this pair. So that's one scenario, is trading retracements on euro today. I like trading retracements on euro dollar, and I think that gives us opportunity. Or if you've been in my Tuesday and Thursday classes with Nurre FX, you know that I pretty much like shorting the crap out of the euro every time it goes up. It gives me temptation to short the hell out of this thing. So that a lot of that just comes with just your view as a trader. And it's worked out well for us so far. A lot of you know from going through my my trading methodology, my mentoring and coaching classes, that a lot of you know that when we're aggressive on a currency, what we tend to do is when we have an aggressive view on a currency, what we'll certainly do is we'll say trade momentum and trade retracements. So whichever one happens first. When you get a momentous move, trade momentum. When you get retracements, trade retracements. So whichever one happens first, because we're looking to go short if it's retracing. If we're looking to sell into dips, if you will. We're looking to sell momentum also. So this would be considered sell into retracements on EUR USD. And like I said, it has worked out pretty damn well for us so far. All right. So let me erase those objects. We already know where our retracement zone is on here. So let me go ahead and, as it comes up, we'll take a little closer look at that. But let me zoom out just a bit on here. We also have this longer term trend line that's been forming throughout the last several days, and you see that it's fine. 1, 2, 3, 4 bounces from that trend line and a 5th bounce right up in here. So the other opportunity that I would say that we have on the euro dollar, and this is where I really like PitView and the way it comes into play for trading confirmation. Our momentum play is going to be to sell it, sell entry, There we go. So a sell entry would be a break of this trend line. The great thing about PitView is that if you're looking at this on a 5-minute chart, we're not doing this as a it doesn't matter what time frame you're looking at. If you're looking at 5 minutes, if you're looking at 1 hour charts, whatever chart you're looking at, it doesn't really matter. This short-term trades, we want to eyeball this trend line right in through here, because it came down and made a nice bounce off of it. But unlike other strategies that we do as a class, sometimes we'll wait for like a 1 hour chart to close below this low. Sometimes we'll wait for a lonely bar to form, which is a candle or a bar that's completely beneath this trend line, if you're one of my students. But the other thing that we can look for with PitView is we don't need to wait as long when we have this type of confirmation. So if you see it starting to come down and break through this trend line, then go ahead and short it. If it's breaking the trend line, if it's breaking through, you can wait for it to break through this low also, if you will. But if you see that the 5-minute totals are shifting, when it breaks this, let's say when it breaks this low right in through here, which would also be a break of the trend line, as you can see, when it breaks that low right in through there, if you see this thing at a -5 on the 1 hour total, if you see this at a -20 on the 1 hour total, go ahead and short the crap out of that thing. When I say short it, that's being a little, I guess that's being a little irresponsible. Do make sure you stick with your money management parameters. Yeah, sell it. Steve, I put 90% of my account in this trade. Why didn't it work? Well, that would be bad. Good thing about selling into momentum is that we can put our stop a little bit closer. So this is our last swing high. So your stop in that case would be 1 pip above the swing high. Wherever that may be, it may not be done making a swing high yet. And then put a limit based on where your stop is and your risk. Put your limit at 1-to-1 risk reward. That's all we're looking for. We're not looking to, remember, on Friday afternoons when it gets to be about noon time here, and this isn't always the case, but if you had to look historically, you can, when the European and London markets start to close up, you can see volatility dry up quite a bit. So if it gets to be about noon time and this isn't working, and if you've followed along with a lot of our trades this week and made a nice amount of pips, then clock out and open your first beer of the day. And Bader, if you haven't already opened it, or Daryl, or Phil, or Nick, Nick already said it was a holiday. So if you haven't already done so, if it gets to noon, just take the rest of the week off, take your afternoon off. But when it gets to noon, volatility can dry up quite a bit. So that, whichever one comes first, trading into retracements or a momentum break, look for both of those to occur, and if they do, then jump in. So this is an and/or scenario, or whichever happens first scenario, I should say. Go over here. You can look, doesn't matter the time frame on that. We're just taking whatever comes first. You can see it's already a -5, so if this came down right now and broke through that low, we'd be selling it. Nick says it's a bit early for a beer. Nick, all I ask from students is that they're honest with me, and I know you're Canadian, and I know where you're from, and I know for a fact that there's no such thing in Canada, because I have a lot of Canadian buddies, as too early. Especially on a vacation day or a holiday. All right, just kidding. Folks that are new to the class are probably saying, I really hope he knows that guy. Yes, Nick's been a student of mine for a while, so yes, I know Nick. All right. Let me bring this over once again. So that's our scenario there. We'll go ahead and watch that as it comes into play. Keep that over there. Dollar yen's another interesting one today. Looking at I've been kind of waiting to see as we've gone through class, because we've had a nice little up day occur, a little open to the upside. Let's see here. Daryl says this is Steve at one of his more serious moments. Yes, I'm very serious. I think if you take the markets too seriously, you'll be a ball of stress. Dollar yen is another one that I'm looking at on here, and there's a lot of scenarios today, and I would hate to throw too many scenarios out at you today, because I don't want you to think that you have to take every single trade that I put on, because that could lead to over trading. And just like in our scenario, from my days as a Chicago trader, that could lead to you, instead of buying drinks for the group, it could lead to you, having to have drinks bought for you. Man, what is this guy's obsession with alcohol? I don't know, but I am from Chicago. Anyway, let's take a look at dollar yen, because I think this presents opportunities also. This was the big trade we got in, and one thing that we've said before is dollar yen, the yen right now is one that we really like trading in either direction. The euro dollar, I'm pretty biased towards shorting that thing, but the dollar yen I think is one where we can take a bias to where we can trade it in either direction. I think whenever it shows any signs of momentum, essentially in either direction, we can go ahead and trade it. The trade that I'm looking for today is the fact that when yen made this huge spike up, this was after non-farm payrolls last week, it came down and settled and found support. It broke through 118. It came down and kind of rested its head on 118, and then made a break up to 119 again. And you can see today it came down and made a nice little retracement right at that 118 level, right before it retraced 100%. So it came down and made a nice little retracement to where it's trading right now in the retracement zone. Now, one other thing that you see on this is what else do you see on this chart? You see a shoulder, you see a head, and you see another shoulder right down in here. So you have kind of an inverted head and shoulders pattern on this 1 hour chart, a reversal pattern. And it's also in a retracement zone. Now, it all depends on how much liquidity that we have in the market today. But one thing I would like to see, I'm going to go ahead and take the retracement off of here. Okay. I'm going to take the fib levels off of there, and we're just going to trade it like this. Because what I would like to see on the yen today, especially since the markets are up right now, a lot of that's built into this little upward move that we've had on the yen. This isn't a small move, by the way. That's about 80 pips. So I would like to see a buy entry on the yen, a break of neckline. And again, we're looking short term here. So we're looking short term, break of neckline. And we're going to do the plus 20, 5-minute total, or a plus 5 on the 1 hour total. Remember, we don't necessarily have to wait for a close above this neckline right in here. If we start to see it coming up and breaking the neckline, and you see a lot of accumulation start to occur on dollar yen, that's why we use PitView, is because it can give us those earlier entry signals. So the stop would be, I saw it coming down right in through here, which would now create this as being kind of the right shoulder. If this does turn into a higher low, if you will, you never know. This could come straight down and break through this support level. Not really looking to short it at this point. Don't know why. I just don't want to overtrade. and get whipsawed today. I just think with the markets being a little up, I think we should favor the upside on this. So your stop should be 1 pip below the right shoulder low, whatever that turns out to be. You never know on these head and shoulders patterns and things like this. This could turn into a double bottom. It could break this low. If it does, folks, you know, we might see just a little bit of more of an unwinding in the yen. But the yen has been, when we look at total view here, one thing I want to show you here real quick is that the 24-hour and total view still has the yen as being pretty sold. You know, it's been pretty weak against a lot of the other currencies. I like trading against the dollar just because we're in the U.S. market morning. Dollar is kind of driving a lot of the action here today. Markets are up, so I like this more as a risk-on trade, if you will, risk appetite trade of this breaking through that neckline. And remember, we'll meet again on Monday morning to go through any other trading scenarios we might have. So if this makes a double bottom, we're looking for just a break through that resistance area. And then for a limit on that, look for a limit of just 1-to-1 risk reward. No need to take any unnecessary risk. A limit of 1-to-1 risk reward. So we'll go ahead and add that to our list today. There we go. Where are we at on time? Oh man, I'm already six minutes over here. Sorry about that. Taking up way too much of your time. However, let me go to some other scenarios here for you. Too bad, man. We're trading. I don't know why I make that voice all the time. Let me go here and see how's dollar Swiss is doing pretty well for us so far. You see it's hovering right at that 9,300 level. What's euro dollar doing over here? All right. Well, euro dollar, this is the scenario that we were talking about here. Euro dollar, we don't need, it's already in the retracement zone. It's already come up into the retracement zone. So we're going to go ahead and sell one lot. I'm going to soon do one lot on that. Why? Because it's already at a -5. It came into the retracement zone and euro dollars at a -5. So let's sell that one. Let's sell it. Let's put a stop right up above our high, which was 1.4462. So 1.14462. And how much are we risking on this trade? How much are we risking on this trade? We're risking 32.2 pips. So we're going to go ahead and put our limit at 1.13. Let's see, 32.2 pips. Put our limit at 1.13818. I believe that's correct for the downside. There we go. So that one executed. So we got that working for us, which is nice. Just got one micro on that. Again, don't want to give too much back. I'm willing to give the trading gods back, 30 pips today. They've been good to me this week. So I'm willing to make my sacrificial stop order, if you will. It's been a good trading week. So, but that's the reason why we got in that. 1 hour total was at a -5. Couple of options that you always have with PitView. If you do see we always talk about managing your trade in this class. Since we got in on a -5 on the 1 hour totals, if it starts to come up toward your stop order or it's still sitting right down in here, you can always get out if it goes to a +5 or a +20 if you want to kind of get out a little bit earlier. Your other option on this is a time stop. If by noon today, if nothing's shaking on this trade, maybe close it out and just let it go. If you have a profit or just a small loss in it and you want to reset your account for Monday and you already have a nice profit for the week, if by noon nothing's shaking and everything's consolidated, I have my permission, go ahead and close it out. So, those are all just kind of discretionary options when it comes to trading. Initially we always just put in our stop, put in our take profit, and let it ride. But those are also just, we call those alternative exits. That's another way PitView can help you is if it goes +20 or +5 of getting out of these trading scenarios. I would probably look at the 1 hour totals a little bit closer on that. All right, now last scenario I wanted to show you here for today, and we can kind of continue on with this conversation next week when we reconvene as a class. Pound dollar is another one that we could look for more contrarian trades on, and I want to pull this up here in the middle. What I mean by that is, a lot of the trading scenarios we've had today have been contrary to the dollar, meaning have been focused in on dollar strength. Have a good weekend, Tom. See you later, buddy. Have you been getting any of my emails, by the way? Don't have to answer that, but just want to know. Been sending a bunch out. Here we go. Consolidation right in through here on the pound. And let me change this one to pound right up in here. Once again, going to our total view and looking at the longer term, the 24 hours. The pound has actually been pretty well bid. Good news this week on the pound. The pound's been absolutely crushing it. It's one of those other currencies that has been bumping the dollar trend. Another option that you have today, and here let me kind of bring this up a little bit so you can see it a little bit better, is this consolidation right down in through here, this sideways consolidation. This is only about a 40 pip range, but towards the end of the day, especially towards the end of the London session, which is going to end here in about an hour and 45 minutes, I'm not going to put this one necessarily on our worksheet for today because I think we got plenty in here to keep us busy. But, if you are a pound trader, I know a lot of you are over there in London, if you start to see a break above this consolidation zone, this sideways area right in here, and you see the pound start to make either a +5 or a +20 on these totals, you might see what you might be seeing, especially if it happens before the noon time. You might be seeing traders kind of settling into a long position. So a lot of this consolidation might be profit taking, to where a lot of traders still favor the upside to the pound. But if you do start to see it break through these levels and you do start to see a large amount of buy-in balances, especially before noon, you could see a lot of accumulation taking place on the pound. Now the pound, we already have dollar long positions in play. We don't need to go short pound dollar. We're already short euro dollar. We're long dollar Swiss. We're already long plenty of freaking US dollars right now. So we're not looking to take a short trade, but at the end of the day, if you see, and when I say the end of the day, I mean the end of the London trading day, if you see this thing bouncing through this resistance zone, then look to take a buy. So I'm not going to put that as a trade scenario, but because I think we already got some things working in here. But if you're looking to say trade something contrary to dollar strength today, you know, I kind of like dollar strength today, to be honest with you. I don't know why I have that view, but you know, put your stop below the low, and you can look for a nice little run up here in the pound if you start to see a lot of imbalances. But I wouldn't trade it in this range. I would just wait for a breakout to occur. That's all I have for trades today. I have this in our little trading sheet along with some of the articles we just went through as far as our scenarios go. If you haven't been receiving the trading sheet, please send me an email. That's as of today, February 13th. Happy February the 13th, folks. Happy Friday the 13th. I don't know if you've ever seen that movie. Anyway, happy Friday the 13th. Let me go ahead and save this while I'm here. So Friday the 13th, that's like a bad luck day. So we all get to experience some bad luck right before we get shot in the ass by the Cupid tomorrow for Valentine's Day. So that works out well for us, which is nice. So I'll save that. If you haven't been getting those, shoot me an email. If you haven't been getting those trading sheets, Steve.Nurre at PitView.com. Eric, I saw your question on here. Looks like you're pretty new to Forex trading. If you're new to Forex trading, Eric, shoot me an email also. I got some resources for you that take people through the basics of Forex trading. I have my own separate company actually, to where I do mentoring and coaching on just basics and basic information on Forex. So, yeah, shoot me an email at Steve.Nurre at PitView.com. Other than that, that's all I got, folks. Amelia, I'll be calling you after class actually. Gary, you should be on your way to spring training very soon. So good luck with that. All the rest of you, if you do have any questions, please let me know. Don't hesitate to let me know. Kimberly, I just saw your reply to my email. Actually, here in about an hour, I have a conference call with our technical support guys. I apologize. When it comes to technical stuff, I am an idiot. So I apologize that they never got back to you, but I will mention your name, and I'll make sure that that gets resolved today. But going forward, just be safe. Don't overtrade today. Manage your risk effectively, and you'll be just fine. And happy trading. I will see you all on Monday morning. One other thing, if you're not registered yet, if you go to PitView.com, you can register. The classes have now been opened up through March. So if you go to PitView.com, there's a little link at the top where you can register for the live trading classes. If you're not already registered for those, please do so, because otherwise you won't get the reminders. Here, I'll give you the actual link for it. There we go. You should be able to see that in the chat. All right, I've overstayed my welcome by about 15 minutes. Sorry about that. Happy trading, good week, good job this week, everybody. And I will see you on Monday, bright and early, to set up our trading week for next week. Hopefully, we can continue this run that we've had of making some nice little pip action. So, happy Valentine's Day. Have a great weekend. Bye-bye.